Well, guys, we have some groundbreaking news from one of the biggest luxury and sports car automakers in the world, Ferrari, about their investment in hydrogen fuel cell technologies. I can assure you that this is going to play a critical role in the image around hydrogen fuel cell technologies and why hydrogen stocks like Nikola Motors, Plug Power, Bloom Energy, and Advent Technologies will indeed be potential long-term winners for those that buy these stocks right now. I'm going to explain exactly the type of investment that Ferrari has recently made in this very lucrative hydrogen fuel cell business and how that could particularly benefit one stock on the market. But as usual, guys, before we get into it, make sure to drop me a thumbs up and hit that subscribe button if you haven't already. So the first thing I want to address is exactly the plan Ferrari has laid out for their electrification. Now, the first thing to keep in mind is Ferrari is one of the last brands that we would expect to electrify their fleet. Obviously, Porsche and Audi have electrified a lot of their high-end hypercars and sports cars, but Ferrari's entire brand image has always revolved around Formula One and racing. And racing, as far as I know, in the US through F1 and even very famous sports car series like the IMSA and the WEC are primarily revolving around hybrid technologies that still rely on an internal combustion engine. And that's actually one of the reasons Ferrari launched something like the SF90 Stradale, which is their first plug-in hybrid EV. And this comes after Ferrari announced their plans to be 40% EV only by 2030, which is going to include this plug-in hybrid technology. So why exactly did Ferrari decide to go ahead and invest in hydrogen fuel cell technologies? Well, as you can see, Ferrari is essentially investing in a massive Bloom Energy fuel cell to run their plant and manufacturing facility in Maranello, Italy, which is obviously their headquarters. Now, what exactly is this Bloom Energy fuel cell technology? Well, for those that don't know, Bloom Energy is a company that sells stationary fuel cell servers like these in the background that can run on natural gas without any combustion to produce electricity. These servers can be deployed on the side of facilities and offices and can run completely independent of the electric grid, meaning that you can save a lot of money from the expensive cost of power while also having the reliability and durability of having your own energy on demand for when you need it. If anything, what this really shows is that companies are spending a lot of money to invest in decarbonization, even some of the most exotic brands like Ferrari. And so this is going to play very well in the hands of any hydrogen or electrolyzer business, especially in the companies that I own in my portfolio, like Nikola, Plug, Bloom Energy, and ADN. And for someone like Bloom Energy specifically, this is going to mark a pivotal movement into the massive European market, which is already well ahead of the US in their race to decarbonization. So to understand this opportunity a little bit more, let's actually look at Bloom Energy stock to see exactly why this Ferrari deal shows us this stock is pretty darn undervalued right now if you're looking to invest in the clean energy sector. As you can see right off the bat, this company is only trading at a price to sales ratio of $3. Now, comparing it to its competitors like Plug Power, Ballard Power Systems, and even F-Cell, as you can see, those companies are trading at price to sales of well north of 15. Now, obviously, that is for good reason, because as you can see, something like Plug Power is growing sales by 95% quarter over quarter, and over the past 5 years, on average, they've grown revenues by around 42%, whereas something like F-Cell has grown 17% over the past year or so. But obviously, this doesn't mean that Bloom should be trading down here. And because Bloom already does so much in revenue at around $970 million, which is almost 2 times the amount of revenue that something like Plug Power does today, there's a lot of upside in this company for the long term. And even if we now look at the balance sheet of Bloom, we can see that although in the short term the market is trying to price in the fact that they have a little bit more debt than they have assets on the balance sheet, the key idea to keep in mind here is that over the long term, these guys are going to be approaching cash flow and profitability a lot quicker than some of their competitors. And as we all know, when cash flow is the game, investors on Wall Street really take note, and that could play very well in the hands of something like Bloom Energy, given the fact that the hydrogen industry is a massive and fast grower And BE is one of the companies that's been in this industry for over 20 years. And as you can see, they've had very consistent revenue growth over the past 5 years, and their gross margins are well in the positives. We have a lot of companies like even Plug Power whose gross margins were in the negative in 2021, but Bloom is one of those companies that has just been around the block for such a long time, and their technology has given them a massive competitive advantage, which is why they've been easily been able to increase their R&D costs over the past 5 years, while their SG&A has not gone up that drastically, which is obviously a good thing if you're an investor. And as you can see, although Bloom has a little bit more long-term debt than ideally you would like to see, in the short term for the 12 months, they have plenty of liquidity to survive this business. And as they enter cash flow positivity in the end of this year and in 2023, we should start seeing more institutional participation around Bloom Energy's common stock. As you can see, the forward PE is already priced in at around $71, which is pretty cheap if you consider the fact that this is going to be the first few quarters that Bloom is going to be cash flow positive. For something like Tesla, for example, Tesla is trading at a PE of 92 right now with a forward PE of 43, and that's after the stock has collapsed over 50% since the highs in early April. And I think that puts into very good perspective the fact that there's more upside in something like BE than in something like Tesla, given the position these two businesses are in right now. And the best part is that although 2022 is going to be a relatively slow year for the entire industry given the high interest rates and the fears of recession, in 2023, analysts are expecting an acceleration in revenue growth to around 30%. And as we all know, the motto on Wall Street is that the higher the growth rate of the company, the more price to sales valuation can be assigned to that business. And obviously, BE is only trading at 3, which can easily be accelerated to 10 or 15 in the next 24 months, which obviously leads a lot of upside. And the best part is that 2023 will also be a year where Bloom is going to be profitable with an EPS estimated at 23 cents, which is exactly where that $74 PE really comes from. And although in the long term, by 2024 or 2025, the PE will compress, in the short term at a very early stage, these companies can run extremely high PEs, well north of $200 to $300. And so in my opinion, this deal about Ferrari not only goes to show the massive benefits hydrogen fuel cell technologies provide to the entire automotive and commercial industry, but they also put into perspective the massive investment opportunity behind something like Bloom Energy stock, which is by far very undervalued and overlooked by the entire investment community today. And to add cherry on top of the cake, it's a matter of fact that solid oxide fuel cells, which is what Bloom Energy employs, are the most efficient fuel cells in the entire world that run at over 60% round-trip efficiency. And what makes this even better is the fact that this technology can not only be used to make electricity, but because of its high operating temperature, this can actually provide heating opportunities for facilities where this Bloom box is situated. So somebody like Ferrari can also replace their natural gas heating system and employ simply this one system that does both the jobs. And that for me is a pretty exciting opportunity and a value proposition, which is not only going to save costs, but also reduce carbon footprint, which is something that is a very rare combo to find in the industrial and commercial businesses. But as usual, guys, make sure to drop me a thumbs up if you found some value from this video. Let me know down in the comment section below what you guys think of this Ferrari and Bloom Energy deal and how that sets into picture the massive investment opportunity behind hydrogen fuel cell technologies. But as usual, guys, I hope you enjoyed this video and I'll catch you guys in the next one. Take care.